On the flag, I'm still amazed, to me, that Sundays in the NFL is really that in college football Saturdays, that's still holding. And that those flag moments are still beautiful. And I agree with everything you said about, growing up with ABC, NBC, and CBS, that was it. And now we've dispersed as a community. But I still believe NFL football, Super Bowl parties, and the flag events that occurs, those are the ones that, I really feel like it's going to be okay. We're, as a society, we're still celebrating.
Yeah, I agree totally. That's why I'm sad. I'm sad when I see them allow some of the things with the flag and pull at some of the things that do keep us united, because we've all become so much different and diverse. So I think it's interesting dynamic, but yeah, I kind of boycotted the NFL there for a brief moment, and then I'm still may boycott it. I don't watch it near as often as I used to, let's put it that way, but just some of the things are a little nuts, but hey, I'm getting old, so kids are like, Dad, why are you being that way? But it is what it is, so. We've got two guests on Zoom that couldn't make it. Tom Williamson, Emily French. As most of you know, Tom with Transportation Consulting Group CEO, and Emily French with her Protein Advisory Group and heads that up. Our guests on the panel, Tom Willis, CEO Conestoga, Andy Daniels, professional trader, angel investor, jack of all trades. Andy will kind of clue us in on a lot of different things. Susan David with the Redding Huber Report. She used to be at ADM and CGB. Who we got next? Walter Cronin. Walter Cronin was with Green Plains, kind of left, and Walter's got a new interesting project going on with the protein space, the meal. I can't see down the line, so. Gregg Doud. Gregg, I think a lot of you know Gregg. Gregg used to be the former chief negotiator for Trump, so we're going to hear a lot of the trade talk stuff from Gregg. He's now with Aimpoint, their lead economist and the VP at Aimpoint. And who am I missing down there? Mike Mock with Mock Consulting. And all of you know Mike, so Mike's been with us for a number of years and provides just awesome intel on the grain side of things for producers. And Greg Beck, Senior VP at CGB. So did I leave anyone? Did I miss anyone? I don't think I did, so couldn't see down the line. But I thought we'd kick things off. Let's talk about the transportation side. Everyone kind of asked what the plan was. You guys know me. I just kind of roll a kickoff. We'll roll this thing, shoot questions out. I like it to be off the cuff, not planned, no canned questions. Everybody's like, hey, what the hell are we talking about? I said, we'll see what we're talking about. I'm not really sure yet, but we're going to figure it out as we go. We're on these calls all the time as investors, so I thought it'd be good to include you guys in on the wrap. So I thought we'll start off with Tom, talk about the transportation side of things, where the bottlenecks are, how you see things playing out. We'll move over to talk with Gregg Doud about where we see things with policy. I know Mock had a couple questions there too for Doud, and then we'll start to move into some of the more corn, bean, wheat type things. On your tables, you got the text numbers if you want to text them. One's my son, one's to Todd. Keep the questions kind of clean and legit. Don't be firing off a bunch of funny jokes. So I'm kidding you. I told Jordan he might get a few from some of my friends. So we thought it'd be the easiest COVID-friendly way to ask the question, so everybody wasn't having to get to a certain mic and all that. So I hope it works well. We'll see when we get to it. But Tom, kick us off, buddy. Tell us what you're seeing out there.
In my 40 years.
I think you met Tom Williamson.
Oh, Tom Williamson, go ahead. My bad. Tom, you're on mute. You're muted up, Williamson. Maybe. We got it going. IT guys, you on that? We may have to get back to you in a second. They're trying to figure it out in the back. I see them all buzzing around back there. Hang on a sec, guys. Tom Willis, let's start it off with you. Hell, you're ready to go. What do you got? Let's do it. Right.
Tom?
Yeah.
All right. I put a disclaimer out there. I have the privilege of serving on the National Sorghum Producers Board. Tim Lust, who's president of that organization, is here today. And I know he's in the room here somewhere saying, oh my God, what's he gonna say? So, Tim, I'll try not to embarrass you. Real quickly, from our side of things, as I was gonna say, in the last 40 years, I don't think I've ever seen a more combobulated mess when it comes to logistics, at least in our space, whether it be shipping product out on tanker cars or bringing corn trains in. I have never seen anything like this. So,
Yeah,
that's
I
just
hear you.
essence on it.
No, I agree. We're hearing the same thing. Williamson, you back? Are we live with you yet?
I'm here, can you hear me?
We can hear you barely. Turn it up. You don't need to, they'll get you. Go ahead.
Well, precision scheduled railroading, as we talked about before, Kevin, has had a major impact on all the railroads. They're doing a darn good job from terminal to terminal, but they're doing a horrible job in local switching. So what I call the first 50 miles and the last 50 miles, the railroads are just falling flat on their face. We're filing problem logs constantly for plant shutdowns, for lack of service, but it's in the local stuff. Once it gets to that first terminal, it moves reasonably well, except for, the floods and the forest fires and those things that we've had impact, particularly in the PNW the last 60 or 90 days, where we've had some real service interruptions. I mean, they're not disruptions, it's just total shutdown. But in general, we're doing okay on the rail side. Of course, we've got a lot of other issues going on with the other modes of transportation. We've got a lot of bottlenecks on the rail side. When you want to talk about containers and some of the ports and the problems the ports are having, there's a real disconnect again in that first 50 miles and that last 50 miles. Once you get the containers out of the ports into the railroads, the intermodal trains are moving reasonably well. We're not finding any major problems right now, except, of course, we got the January 1st rate increases just recently. We've seen the least rate increase we've seen is 3%, the highest was 8%. And of course, the Burlington Northern now is coming out with a new fuel surcharge. They did away with fuel surcharges for a number of years. Now they decided, with the fuel cost going up like it has, that it's time to reinstate fuel surcharges. And so, again, that's going to impact all of our economics on rail shipping. 8% increase on a lot of the commodities. We're seeing grain, most of the ag commodities are between 3 and 5%. We've certainly seen some of the other commodities, let's call them manifest shipments and things that move in single car shipments. We've seen some of those rates as high, increase as high as 8%. That's a big jump, particularly when you compound it, because we keep listening to all of these politicians talk about inflation and what causes inflation. Well, if you put transportation on fertilizer, then you put the transportation on all the other inputs into the farm, and you put the transportation on the products coming off the farm to the local elevator, and from local elevator to the train loading stations, and you add that fuel cost and the transportation cost impact throughout the ag commodity, transportation, as you know, probably today is close to 30% of the landed cost of corn in China, if not more. It's a minimum of 30%. And it's just this compounding of the transportation moves that we have.
Yeah, are you seeing anything with trucking, Tom? I mean, what are you seeing on the trucking side of things? Everyone I'm talking to says it's probably truck driver shortage isn't going to change or isn't going to get improved anytime soon. A lot of the older people have retired. You still got the age requirement to 21 for the long hauls. And I think the people in the room should know. I mean, Tom, aren't you hearing a lot of the same? I mean, you got trucking companies, paying upwards of $100,000 plus. I know a company in town that's paying $100,000 and you're home every night and you're just doing local routes. So I think that's going to continue to drive that trucker cost higher, don't you, Tom?
Absolutely. You know, we don't do that much bulk trucking. We do a lot of van trucking. So it's hard for me, and we talked about that a couple of years ago, but for us to talk about what happens on the local grain trucks, we don't have that knowledge. We don't have that input, and it's better handled at the local level. On the other hand, when you're talking about, you know, the major freight companies, yeah, we're involved with them, and you're talking about intermodal, we're involved with that to a limited extent. But absolutely, there's a huge truck driver shortage. It's not going to go away. It's not the best career in the world for people when you're doing these over the road. I mean, some individuals and some families love it. You know, a lot of couples buy their own truck and get on the road and go cross country, and are very successful at it. But you're right. A lot of truck drivers have retired. They got out of the business when the truck stops started shutting down due to COVID. You can't blame them. They didn't have any place to eat. They didn't have any place to shower. They didn't have any place to get food. They couldn't go into a restaurant. They had to order their food ahead of time and get it delivered to a truck stop parking lot. Those are not things that make life easy on the road. For those of you that don't know, I worked my way through college working for a truck line and did over-the-road driving for a while because it paid so much better than anything else I could get. And I'm going to tell you what, that's tough. You drive for 10 hours, then you get 8 hours sleep, and you get back in and drive for another 10 hours, and your biological clock just gets all messed up when you're trying to do that. And I don't think it's a great life. Yes, if you're a couple and you can make $250,000 a year, and you can do that, you can do it. If you really get out there and go after it, each driver making a lot of money. But again, it's a difficult life, and I don't see the trucking situation improving at all in the next 6 months.
Yeah, what about the future? I will say this. We'll throw it out early. I had some comments the last conference we had, 2 conferences ago. Hey, could you guys quit being so futuristic? You're talking a lot about some crazy stuff called Bitcoin. Kevin's favorite position is Tesla. Those proved to be pretty valid, good topics. So I know it may sound futuristic to some folks in the room, but I was on 3 calls this last month, Tom, and one was with the boring company, Musk Company. They were talking about pressurized underground tunnels, where they were trying to tell me they think eventually they can get the freight rate down to 2.5, 3.5 cents a mile loaded. And those would be longer runs, direct routes, direct underground tunnel routes, but through these pressurized chambers. But I thought it was interesting. I'm like, holy smokes. I mean, that would be some type of game changer. And we saw just last week, a week and a half, 2 weeks ago, they did the first long run, wasn't an 80-mile run out in there, where was that at, in Arizona, where they did the driverless truck the whole 80 miles, no human on board at all. And so what do you think the future holds for the autonomous or the underground? How do you think that plays out?
Well, I really believe in the next year to 2 years, we're going to see autonomous trucks running in tandem with a truck that's got a driver in it leading the way. That becomes much simpler to do than to have, and you know, that's the major part of the trucking anyway. If you're doing a 500-mile run and you're going to do that in one day, and you got 3 or 4 other vans that need to go in the same direction at the same time, you can put those together and run them pretty safely, because you know your radar works a lot better when and your sonar when the vehicle in front of you is constant. I mean, I've done this with my wife. You know, we have late model vehicles, and when we have to take both vehicles and go somewhere, mine's got all of that technology on it, lane deviation technology and all that stuff, and so I can get right behind her and set my cruise control at 5 miles an hour above hers and just follow her, and it will keep me at the right distance from her. When she changes lanes, mine will change lanes automatically, sit there, and it's hands-free, and I feel pretty safe doing that. I'm not going to get out there on I-75 down here in Florida with all these idiots. These old idiots, by the way. We have a lot of older people down here that don't drive very well. I'm not one of them, don't get me wrong. I'm doing okay still. But we have a lot of people out here that you don't want to be out on the interstate doing, 75, 80, 85 miles an hour. But I really think running them in tandem is going to come pretty quickly.
Yeah.
And I think that might help a little bit, but it's not going to really relieve this driver shortage.
Right. All right, let's switch up to, let's keep Tom around for questions as we get to them here in a little bit. Gregg Doud, talk to us, Greg. What are you hearing on the trade front? On what's up with China? What's up? What's your view of things? Lay of the land.
Excuse me, I've still got a little bit of a cough here. The question that I get asked very often in the last year since I've left government is, did the China Phase 1 deal matter? And the answer is yes, and so I'm going to give you some numbers to give you some context to all of this, because I spent a year of my life with my Chinese counterpart in 2019 now, a couple of years ago. It was 33 negotiating sessions for the China Phase 1 deal in agriculture. We spent hundreds of hours together talking about our issues, and to give you that context, China's total ag imports from the world are about $155 billion. That's an interesting number because that's exactly the same number as total U.S. ag exports to the entire world last year. So in agriculture, this is by far the two biggest agricultural trading nations in the world. And in the China Phase 1 agreement, what we worked through and resolved were 57 different structural changes, 57 changes that were made. And of those 57 changes, about 54 or 5 or 6 of those are done now. Did it matter? And the answer is yes, because before we started those negotiations, we had about 1,500 facilities in the U.S. that were eligible to export products to China. I'm talking about meat processing facilities, pet food facilities, infant formula facilities, 1,500 of those. Today we have well over 4,000 facilities eligible to export agricultural products to China. So where are we at today? If you look at the October trade data, it's a very interesting month. It was the biggest month in history for U.S. soybean exports to China in dollars. It was the biggest month in history for U.S. agricultural exports to China. It was the biggest month in history for total U.S. agricultural exports. So much of what you have to see in agriculture today in terms of global trade and where it matters is what's going on inside of China. And there are two issues you have to follow. Number one, what are soybean crushing margins in China? It dictates almost everything, in my opinion. We have to do a much better job of understanding what are the dynamics for crushing margins in China. The second thing is hog prices in China. We have to keep in mind when the trade war was going on and everything was going to hell in a handbasket, China had ASF. They lost 40% of their hogs. Today, we've seen those hogs come back. We've seen in the last 6 to 9 months, hog prices in China collapse, pork production back up to normal, and we've seen, they have to import a bunch of corn now. I will tell you, Kevin, I can tell you in great certainty what U.S. or Chinese total corn imports are going to be going forward. They're going to absolutely be somewhere between 5 and 40 million metric tons. I guarantee it. But so you have to, this increase in China corn trade and imports is a big, big deal that we have to keep an eye on. One of the factors, and I'll close with this, and I'll talk about Farm Bill again if I get a chance, because this is some important point I want to make to you. But one of the interesting things about crush margins in China is the landed cost of soybeans into China. Keep in mind that ocean freight from 2020 to 2021 doubled. That directly affected that crush margin, because you add that additional ocean freight in there, that really pinches that crushing margin in China. And what that really did with the decline in half the provinces in China lost electricity here this summer because of the lack of coal. The Chinese economy is much softer than what they're telling us. If you really dig in and see what's going on there was not a V-shaped recovery. It's slowly recovering. This has a dramatic impact on the demand for everything going on in China, and all of these issues back into what China's demand for corn and soybeans and meat are going to be going forward.
Perfect. Hey, Walter, you want to add some things on the crush side? While
Yeah,
we're
Kevin,
talking?
thank you. I was going to ask if I could just follow on that. As the U.S. really domesticates our soybeans, China's at risk. you know, in the U.S., we export half of our soybeans and we crush the other half. And China is the biggest beneficiary of that. Renewable diesel is changing that dramatically. So there are two places, well, I'll go this way. There are two places in the world where people should be very concerned about U.S. renewable diesel policy. One is Beijing, because one of their big suppliers is about to stop supplying them. And the other is Argentina, because guys like Greg Beck here just announced a brand new soy processing plants, and there are others coming. So briefly, I asked Kevin if I could just do a quick background, and I don't know the audience completely, but how many people knew that in April of last year that Phillips 66 entered into U.S. soy processing? Okay, and then how many people know that in August of last year, Marathon Oil entered into U.S. soy processing? Those were both two small deals, about $75 million each, that those companies put in to secure all the soybean oil. Then, bam, blockbuster deal, Chevron puts $600 million into 2 Bunge soy processing plants to rehab them. $600 million. My point to the audience is, if you are a soybean farmer and you and your neighbors would like to build a soybean processing plant, today it's a very easy proposition. You can get $100 million today from the petroleum refining industry. So a standard plant, 3,000 tons, costs $350 million. You got $100 million in the bank right now from the petroleum industry. That's number one. The Macquarie's and other banks of the world will finance about another $150 million. I'm glad to see Greg shaking his head yes on my numbers. So you got to raise about $100 million for a $350 million plant. And a soybean processing plant doesn't go away. It is a source of true economic development in your region. In the U.S., when I first entered into the U.S. soy processing industry in the late 80s with Continental Grain Company, the U.S. was contracting in the Mid-South. A lot of those plants were closed because the perspective was Argentina is going to be the powerhouse in the world in global soy processing. No other plants beyond the Mid-South that I can remember basically were closed. They're all going, and one of the very old ones at Cairo, Illinois, just got a $300 million injection from Chevron. So this is a crazy dynamic time in soybean production, soybean evolution. And as I said, and I'm glad to talk to anybody, it's not a commercial, but it is a commercial. If you want to co-op and build a soy processing plant, which is a great source of economic development in your area, today you've got a petroleum refiner. For the first time in my career, I think for the first time in North American soy processing, the U.S. petroleum industry is financing the growth of soy processing. So incredibly dynamic time, and I hope, Kevin, at one point we'll talk about the sustainability of policy and people's fears about, could it change, et cetera.
Yeah. I think that's great because, didn't we just see Benson last night? Or when did they do their release that they bought that plant in, did they buy a processing plant in Iowa?
He's speaking today, right? Or he's speaking tomorrow?
Yeah,
the CEO of Benson Hill, so I'm not going to speak for him.
No, yeah, but I'm just
But
saying,
I think what he did was a great idea.
Walter, like we had said, we think there's huge changes that could come about on the soy side that could be exciting. Just like you and I were talking if we were doing for feed in aqua and the other things that we could see happen in the,
Do you want me to touch on that just?
Yeah, go ahead.
Okay, the other great revolution, I just recently departed Green Plains Incorporated. Many of you might be familiar with it or shareholders. We entered into the aqua feed space. If you go to Shenandoah, Iowa, there is a recirculating aquaculture system there with some great research scientists The next great protein revolution from our perspective, and we did a lot of work on it, is aquafeed. And the U.S. is going to be the dominant player in the world in aquafeed. There's two dynamic companies in that space today. I highly recommend that you go to AtlanticSapphire.com and see what's going on there with a Norwegian salmon farmer who basically left the Norwegian salmon mafia and said, this is going to change. Talk about change. It's not going to be beautiful pictures of fjords and pens out in the oceans, et cetera. It's going to be in an industrial manufacturing site. That's a huge dynamic trend. The second one is Superior Fresh. If you go to their website, the Yardley furniture family is developing. Their sites are just absolutely amazing what they're doing with recirculating aquaculture and salmon in recirculating aquaculture. The U.S. is going to dominate this business. It's very akin to the early stages of poultry. The poultry industry is an amazing industry in the United States. The salmon industry and fish grown in tanks is the next big meat protein trend in the U.S. Huge developments coming.
Perfect, Walter. I know the crowd will have some questions for Walter. You can text them, start texting in. And Greg, you want to go, and then we'll let Emily go on the protein side as well. Greg Beck, what are you hearing out there? Same, like you just said, you guys bought a facility. What are you seeing?
Sure. Well, the comments so far have been really good. Gregg Doud, I want to say thank you for the work that you did in China. It was really, really important. Certainly for our company and the Zeno side as an exporter, but for everybody in this room, your point, you can't underestimate the value of that. So the work you did was appreciated. Walter's right on the renewable diesel for sure. We're obviously heavily invested now in North Dakota, pretty excited about that. It's a whole new state for us. It's a whole new territory for us, geography that we don't really understand, but we're pretty excited about that. So in the big picture, Kevin, I think China does need to be worried about our soy renewable diesel policy, and their demand seems to be insatiable. A few things that just interest me is prices are really strong right now. They're really high, and they seem to be like it's going to stay that way for a while. It feels that way. Now, I'm typically a traditional bear, okay, because I see when there's these huge prices, it flat out encourages the other countries to produce. Brazil has a lot of acreage yet that they can grow, and we can't forget that. High prices cure high prices. So I'm surprised that the prices have been as sticky as they are, and that they've been as strong as they are for as long as they have been. But there is an insatiable demand coming out of China. For sure, they're going to have record imports. When we look at crop marketing, CGB, we're not really so much of a flat price trader as a basis trader. The advantage that we do have on flat price is that we're in and out of the markets a lot. We can trade. If we're wrong, we get out quickly, get back in out, in out. For you as producers, as farmers, you got to have one crop to sell. And most of you aren't in and out of the market. So it's trickier. So what I see with the basis right now, we've got a strong basis that's driven by high barge freight. So when barge freight goes up, it's more expensive to ship. And what the Gulf needs to do is they need to bring that grain down to New Orleans. And the Gulf basis is not going to pay 1 penny more than what it takes to get that grain to move. Okay? The other thing that we look at is spreads. We let spreads do the work. We let the basis do the work. We're seeing tight spreads, inverted market. So if you look at what the grain trading companies are doing, the market says, empty your stocks. So at CGB, we're fighting to get empty right now. But what do we see the producers doing? Sitting on stocks because they think the market will go higher. Or I don't know what their reasons are. Maybe it's habits, maybe it's things. So I think as a producer group, it would be, really important. Look at spreads, look at what the market's telling you to do, look at your basis levels. And base your decisions off of that, not what you think China may or might not do. Today, in the world, the U.S. is not competitive in any corn positions out of the U.S. Gulf in any month from now through October. Argentina has a better price, the PNW has a better price, Brazil has a better price for corn, and it's the same thing for soybeans. Okay, we're not competitive in any month in any of those markets. Somebody else in the world has a better price. Over the last 15 years, year on year, we continue to lose world market share. So as terms of an exporter to the rest of the world, we're losing market share. Brazil is gaining most all of it. Ukraine, Black Sea is gaining market share. And we shouldn't take our eyes off the ex-Soviet Union, Russia. They're growing fantastic crops for wheat, just like we're now growing soybeans and corn in North Dakota. We're going to see Russia start growing corn, I believe.
Yeah, I'm on board with most everything that Gregg's saying. That's why we tried to price. I tried to price some bushels, some new crop bean bushels, Mike. I was flirting around with $13. I moved it to $13.10. Yeah, it didn't get filled yesterday, so I probably should have maybe sold a few there listening to Gregg. But I have about 25% of new crop beans already priced. So Emily, what do you got? I'm excited to hear. I think I'm sensing some bearishness here from some of my bigger, more seasoned traders. Let's hear it.
All right. Can you hear me?
Yeah, perfect.
All right, very cool. Fantastic to be with you all virtually. Thank you, Kevin, for the invitation and to be with everybody on the panel. I prepared a few comments, and in thinking about this, one, I was reading the Phil Knight book, the founder of Nike, over Christmas holidays. It was super exciting. But I really like the quote, the best way to reinforce your knowledge of a subject is to share it. So I have had the privilege of being part of the global ag world for the past 25 years. Every year there's something new to learn, read about, relationships to build, and a world to explore. So that point, I am coming from a perspective of all my clients are outside the US. Most of them are end users, so soybean crushers in Pakistan, the poultry and feed and aquaculture industry in Indonesia, Southeast Asia, Vietnam, Singapore, China, Nigeria, parts of Europe, and then South America. So I would offer that the markets have been completely focused on supply and inflation through 2021, full stop. And that is likely to continue into start this year. I mean, that again is clear and evident. From an international perspective and from running price risk management for the majority of my clients, I have been and remain very concerned about the longer lasting impact on demand and believe that the demand side of the equation has been largely overlooked, neglected, and ignored during this last year of a self-fulfilling prophecy of inflation and inflationary themes. So my 12 basic building blocks as we start 2022 is that despite this grave concern and wariness about the current market setup and structure, is that there's also this sheer excitement in the total global agriculture space, and that's technology and innovation and sustainability, and really going back to college, it's D, all these things. So the first building block is, how did it begin? And that was managed money and funds last year. The combined net long position of corn, wheat, and the soy complex, the big five, did peak on the 5th of January, 2021. For reference, that will be the equivalent of next Tuesday this year. Secondly, the Bloomberg index, so really into the indices. Obviously, the rebalance starts on Friday, but for 2021, let's recognize that these indices were up over 21%. It was the best year since 2009. 2009 was preceded by the global financial crisis of 2008, where there was losses of 30%. That is not the setup going into 2022, especially or particularly because of the bearish sentiments for China. Speaking of sentiment, market sentiment and money flows, they dominate. Say it again, they completely dominate. Fundamentals are nice, technicals are nice, opinions are nice, but money flow and algo momentum both rule and rue the day, depending on your position. World monetary challenges, the US Fed has turned hawkish and made it very clear that there will be potential rate hikes. That poses this idea that the US dollar should be stronger in 2022. Plenty of money sloshing around there, even despite the attempts of tightening by central banks. Inflation, the fifth building block, let's remember it will stay, it is here. If you haven't seen it or haven't looked, you can buy $10,000 every calendar year of the US Treasury direct. They are paying 7.1% on I-bonds. So an easy 7.1%, that is reset. So that's through April of 2022, and then will be reset. But if you're an inflation believer, that's an easy layup per se. 1% increase in interest rates adds 1% of GDP deficit. So will technology innovation be deflationary enough? Big question. There's an entire generation of consumers and businesses that has never seen inflation. So get out your history books, because while the history might not repeat, it certainly rhymes. And in rhythm, we find opportunities. Building block 6, asset bubbles, plenty of them. Does anyone care? Crypto, NFTs, equities, the list is long. 7, world freight. Freight was a big one during 2021. Typically, Q1 is the most bearish for the Baltic Dry Index. All you have to do is look at the charts. We do see ocean freight is about down 60% from the peak of October. So if China doesn't replicate its import program in 1920, or that it did in 1920, you do have quite a few vessels out there that will be looking for demand. I guess I just made some money, if you heard that, the cash register on that. But number 8, emerging economy currencies. That's a big one and a significant challenge. Brazil has benefited clearly, the weakness of the real versus the US dollar. That has been phenomenal for their producers, but really, again, kind of overlooked and not discussed is the importers and their currencies. Turkish lira has been annihilated. Currencies are really defensive in India and Pakistan and Southeast Asia. That will impact the purchasing power. Number 9, China growth. There's a storm brewing, a big storm brewing. And, when you look at what got us here, besides biofuels, but the global dietary and the global prosperity and the dietary shift, it's not the world or the US economy or the European economies that are doing it. It is the China economy that drives everything else around it. So that does bother me. Food versus fuel. Let's be real here. The more that inflation and high food costs is in the headlines, the more there is going to be this debate that should we be burning food or egg commodities for fuel? Because at the end of the day, there is and are food shortages and there is starvation, and that does continue, and it has worsened under the pandemic. Number 11, the government intervention in geopolitics, Russia, Ukraine, the Iran nuclear deal or not. China and its role on the world stage. Military spending in 2010 was $100 billion. In 2020, it spent $250 billion. No, it's not the $787 billion that the US spends, but the bottom line is do the math. The math becomes very, very important. And finally, global politics and inequality. It worsened under the pandemic. The rich got richer, the poor has suffered and in cases died. Inequality is the driver in extremist politics. Democracy has eroded in many countries. Nationalism has been used to cover up incompetence. And the key to remember in all of this is that trade is the path of coexistence and cooperation. Peace feeds on prosperity. So with that, I will end my remarks. I would offer probably 3 bits of advice, and that's stay curious, do the math, Everybody puts their pants on one leg at a time, and the rest is out of our control. So you do you, and do it well, and I wish you all a brilliant and dynamic 2021. It certainly is not going to be boring. So thank you again, Kevin, for including me.
Yeah, I appreciate it, Emily. I appreciate it. We'll have some questions coming in, I'm sure. Tom Willis, you going to brief us on the ethanol space? We've gone biodiesel. Let's talk ethanol. We going to be around?
Yeah, since we met 2 years ago, there's been a lot happen in the space, both positive and negative. From a positive side, under the previous administration, they granted us the ability to blend E15, 15% ethanol year-round. That was huge. On the negative side, there wasn't a small refiner exemption that Trump wouldn't grant. So we kind of took it with one hand and gave it back with the other. When Brandon got elected, we kind of thought that, sorry, Tim, we kind of thought that maybe a silver lining in that would be what he would do for renewables. And what we've seen, the reality is a lot of silence on it. The RFS is up for a reset. There were meetings yesterday with EPA. I heard Emily's comments. I'm very interested to see this food versus fuel. The amount of money that big oil is putting behind renewable diesel, because it is a drop-in fuel, that's the difference between it and biofuel, straight drop-in, is tremendous. And back in 2008, when it was food versus fuel and it was ethanol, they could beat us unmercifully. Today, they're on the other end. I'll give you a good example. A grease aggregating company on the East Coast, and basically this is a company that puts a 250-gallon tote in the back of a pickup and goes from McDonald's to Kentucky Fried Chicken and gets grease at 5-10 gallons at a time. That company just sold to Darling Industries for $1.1 billion. $1.1 billion for used grease. So the demand for that is going to be pretty significant. But anyway, a lot that came up yesterday as they were talking about the reset of the RFS from some of the food companies was the argument food versus fuel. We're still 40% of the U.S. corn market, and if the EPA does what they're proposing to do, going back to 2020 and readjusting things in 2021, they're going to take away gallons, which is going to make excess RINs out there. In exchange for that, they're going to bring in 2022, they're proposing bringing it back up to the full mandated amount and not granting any SREs, but that rolls a whole bunch of RINs forward, and at the end of the day, that could impact the price of corn with that. Under this administration, the Supreme Court ruled that E15 blending was not covered by the RFS in 2007. It's a very strict interpretation, saying the rule said E10, not E15. So starting this summer, it will be illegal to blend E15 year-round. And that is a huge deal. And that's where I guess we've been very disappointed as an industry in what we're seeing out of this current administration, because they haven't been very vocal about it. It's got bipartisan support, but it's just finding a bill that they can attach it to, that we can go forward. In the Build Back taxes, or whatever the hell it's called, Build Back America, BBB, whatever. You know, they put in $1 billion for infrastructure. Well, what the hell does it good to spend $1 billion in infrastructure if you can't blend year-round? And nobody's going to do it. So it's for those of you that raise pigs, it's a boar with tits. Basically, that's what it is with it. So we have to get E15 blending year-round. The good news for this industry, and you're seeing it now, is diversification of products. You've got companies like Green Plains that is not, and there's several, we're going through that too. There's a lot of other companies. We don't identify ourselves as an ethanol company anymore. We make everything from 200 proof that can be used in solvents, can be used in COVID vaccines. And the reason that we're doing that is to get away from fuel side of it. And as more people diversify, you've got the 45Q tax credit that's out there for putting CO2 down hole. Short term, the LCFS credits in California, if Oregon and Washington adapt a similar program, is going to be very good. But the other side of that is the amount of renewable diesel that's going to hit the space. And what does that do to those overall tax credits? I guess what I'm saying on it, Kevin, is that as you look forward, is the space good? It is, if you're willing to change. And that's what you talk about. And we're seeing that. Whether, again, whether it be the high protein distillers, high value alcohol, CO2. One of the things that it's a great challenge that I think impacts most of the people in this room. Every time we get a phone call from somebody, a potential customer, they want to know what we're doing for sustainability. And the difference between us selling some of our product, not the fuel, but the other product that we make, is if we can show them a compelling story of sustainability back to the farm. And right now, there's not a platform out there that's universal. And that's got to be developed. But when that does, I believe there's money in it, not only for our industry, but for production agriculture. We've all heard about it with this. So that's kind of what we see for the future.
Perfect. I know we'll have some questions on the ethanol space. Let's move into a little more direct corn, beans, wheat pricing for producers. And Susan, David, you want to tell us what you guys are seeing down at the Redding Huber? You deal a lot with producers. Tell us what you guys are thinking.
Man, I thought you were going to go a completely different direction. I was totally prepared with other points.
Oh, well, hey.
But,
Roll with what you want.
well, I mean, I guess I think of when I hear the other comments that have been made and then seeing what we've been dealing with past couple days, past year, past few years. I think the one thing that is the most important to realize is the fact that markets are ever changing. Now, I'm pointing out the obvious, but we've had these black swan events after black swan events. I always tell Mock that it's like our black swans keep having baby black swans. We had trade war first, and then clearly ASF was a large part of the bean market at that time, and then bam, here comes COVID, and everything changes. And then it's, just when we get back to a point where maybe we're semi-comfortable again, you wake up on, well, I'm going to call it Black Friday, but you wake up on Black Friday and all of a sudden it's, okay, here's the headlines. We have another new variant that's clearly, the media is putting it out there. This is something that is going to affect us and probably affect travel and affect the economy. And it did. It hurt markets for a few days there. And so you kind of, you have those moments, not only as a so-called professional, but as a producer too. Everyone, you have these emotions that run really high because it's the, oh shit, here we go again. So, I mean, I think for me, it's very important for producers to realize that the game, it's changed. It's changed in a big way. The U.S. is no longer the top dog, and I feel like that's sometimes, that's one of the things that we tend to overlook. The American farmer has been used to being number one for so long. Probably, let's play a game here. How many people in the room think that the U.S. is the largest bean producer and exporter in the world? You're probably sensing that I'm setting you up for failure, but it's Brazil ran us over a few years ago, and they're going to continue to do so. They've grown at a rate, acreage-wise. They've increased acres at an average of 5% growth in area planted per year for the past 20 years. Well, let that sink in a little bit. Here in the U.S., we have not grown. And even, so we have this this ass backwards idea of Brazil that they, that they're subpar as far as production goes, and we couldn't be more wrong. So I think that producers probably get really tired of me hampering them about this, but the thing is we have to learn that things are in fact changing. And we're learning right now. I mean, maybe you can throw seasonals out the window, old school seasonals. We have 2 weather markets a year now. We have Northern Hemisphere and we have Southern Hemisphere. And maybe if Brazil has a lot of problems, you could kind of argue that there's a 3rd weather market if their second corn production is in a jam. So I guess the next thing for me is producers, or if you're in the industry, I feel like it's very important that you make sure that you're surrounding yourself with the right team of people, who you do business with, who you're buying products from, who you're selling your products to, who you're gaining information from. And I think that it's very important that you're seeking out those people that have your best interest in mind and have the best interest of your business in mind. So when I spent a lot of time as a merchandiser, while I worked for CGB purchasing grain, I would never recommend that someone get themselves into something or into a situation that did not have their best interest in mind, because at the end of the day, you're looking to grow a long-term relationship, not a one-off that fills, your need as an elevator. And maybe this is a little backwards kind of from the direction I feel like this conference goes. You're very forward thinking, and there's nothing wrong with that, but I will be the first one to stand up and, no offense guys, but youngest one up here, I'm assuming, unless you guys want to compare ages. You're not smiling, come on.
Just a tad, younger.
But
Just a tad.
and we talked about it, Greg and I talked about this a lot when I was at CGB, and it is that this really is the grain merchandising. It's a relationship business, and we can, as an elevator, you can have all of these high-tech programs, and you can have an app that's great, and maybe you have an app that you can sell bushels on, and you can light the world on fire with indigo, or whatever you may want to do. But at the end of the day, I know that I am going to talk to Denny Bollmeyer, and we're going to form a relationship, because we're probably going to talk about my kids, and I want to know about his family, and I want to know more about his business and how he operates.
Sure.
Those things to me are important. And one thing, kind of going back to that too, the biggest mistake that I see producers making, it's that they're not bringing the next generation in soon enough. You can't wait. And I see this happening a lot. The transition gets messy. You get the next generation is in his mid-30s, but he's never had any responsibility. Maybe he's been the combine operator, but he doesn't, or she, they're not involved in the business side of things. And that is the by far largest mistake that you can make. I guess that's assuming that the generation running the show is doing it in a business-minded way. And last but not least, learn something new every day. You probably saw me up here writing down all sorts of notes. I was writing a list of things to make sure that I had some bullet points so I wouldn't look like a complete fool, as Kevin eventually called on me. But it's very important that, we're in volatile times, and this is a changing market, and the change is the only thing that's constant. And if you're not working toward moving the right direction and adjusting as things, just like Kevin made the points when, in his opening remarks, it's very important that we're willing to change and adapt, or you're left behind. So I didn't answer your questions, but I'm confident that Mark wants to tell us all about $8 corn.
No, I agree. I agree with what Susan said. We had this talk at home with my daughter and I. I just told her, I hate, through the years, she's at Columbia, the Ivy League. I said, I hate hiring Ivy Leaguers a lot of times, early, because they're all scared to fail. I told my daughter, I said, you got to get out there and take some risks, try things while you're young, try your own business, try the NFT space, try some of this metaverse thing, try some of the different things that she can do with Architect. And I can see her being a little hesitant. And I said, yeah, that's a lot of the Ivy Leaguers. I said, because you guys are so good at everything, they don't like to fail. She's been really good at school her whole life. And I think as parents, we try to help our kids out more than they probably need to be helped out because we don't want to see them fail. And then when they come to work with us or they come to work on our farm or in our business, we don't want to see them fail. So we, do all that. Well, guys, come on. How'd we learn how to ride a bike? How'd we learn how to ride a motorcycle? I wrecked the damn thing 1,000,000 times. My mom told me not to ride without shoes. I got on the motorcycle anyway without shoes. I mean, I had to learn. Then they let us learn. Didn't care what we went outside and did. Just went out and were adventurous. And I think that's the key. I mean, I think it's going to be tougher and tougher bringing kids into the mix if you don't let them fail. If you don't let them do some marketing. If you don't let them have their hands on the steering wheel. When the hell did they learn how to drive? You guys know how old we were. I was 10 years old driving my pops' truck down the highway and the speed limit was 75. I mean, on booster seat thing. And it was, hey, I'm going to take a nap, drive us home from the farm. We were running a bunch of cattle at the time. And, my grandma was like, oh my gosh, and he's smoking cigs in the car and the windows are up and shit, no belts on, and that's the way we rolled. I mean, we were taking some risks. So I'm just telling you, if you're not going to allow your kids, if you're not going to encourage them to fail and get out there and get skinned up and scraped up and break some bones, don't be pissed at them when they can't do anything. Or you can't call them, hey, you're a dummy. Well, yeah, you hadn't let them take any risks. They got to figure it out. They got to fall off the bike. So you got to segment off a portion of the business or a portion of the farm and let them fail. And they got to learn, and they got to be able to learn and meet people and network and grow and feel like they got some skin in the game. And if they don't have any skin in the game, I don't think it's going to work. So I'm in 100% agreement with Susan. I'm trying to bring in as many young kids as I can from a diverse background, just because I think that's what I'm going to need moving forward. I don't know what the hell role they're going to be in some of my businesses moving forward. So I've got to have kids that aren't going to melt down when I yank the rug out from under them and change direction all of a sudden. You see what I'm saying? I mean, think about that hiring. You got to hire someone who isn't going to flip out when all of a sudden you say, yeah, that whole project ain't worth a shit. We're changing plans tonight, and we're going a different direction. And if the kid melts down, well, you can't have that. That's what I'm saying. You got to have people that can handle that change. So think about that as you build your business. Let's go with Mock and AD, follow it up here, and then we'll shoot some questions. Start texting questions away if you have anything. Mock, what are we seeing here, grain prices?
I'm just glad I wasn't last on the totem pole. We'll leave that for Andy. These folks are too important, and the time is too short. I got to talk to Gregg first. I'm concerned about the upcoming Farm Bill. Pat Roberts, not there. Colin Peterson, not there. What can you tell us about the Farm Bill and the prospects, Gregg?
From a Washington perspective, first of all, I've been in Washington 30 years this year, which means I'm of absolutely no value to anyone in the outside world any longer. Yeah. I get that. But for 40 years, ladies and gentlemen, in agriculture, we have had a man that has written farm bills. 8 of them. He's gone. His name was Senator Pat Roberts, the only man in history to be chairman of the House Ag Committee and the Senate Ag Committee. Colin Peterson is gone. That's 80-some years of institutional knowledge, chairmen on the House and Senate side. They're gone. My message, in answer to your question, is very simple. Don't assume that you have anyone on Capitol Hill that understands anything about U.S. farm policy as of today. The staff are not the same. The staff on the Senate Ag Committee that wrote ARC and PLC, I was one of them. I was one of the senior staff on the Senate Ag Committee during that Farm Bill process. They're all gone. We're all now in private industry doing what we're doing. We're advising. We know the folks there still well. Don't assume that these folks know anything.
That leads right to where I want to go. If we don't know enough about what policy is going to look like moving forward, we had Kevin's list on the one slide, and I noticed Turkey. Emily was right to point out that their currency is imploded. The geopolitical risk, Russia, Ukraine, China, Taiwan. You know, the S&P was up 27% last year, and almost anyone in agriculture made money last year. It was too easy, way too easy. This, moving forward, is going to be much more difficult. It's going to be doing things incrementally. I double-check Kevin's wire frequently to see what he's done, and he's got 60% of his new crop wheat hedged, and I doubt that we've got most growers there. Everyone was bullish wheat. It was going to the moon. Obviously, it did set very high prices, and then we broke sharply, and people don't know what to do now. And one of the ways that we tried to create, Susan is in the same camp, you try to keep people even-keeled, and as you get older, and I'm sorry to say I'm going to turn 68 next week, but the most important word in my vocabulary these days is balanced. So what Kevin did, what Susan and I try to do is say, well, if you're not going to sell, you know, any of the 22 wheat crop, because we haven't had a lot of moisture in the West, and we didn't get all the wheat planted in Ohio and Michigan that we thought we would, let's go out and look at 23. And we've already traded $8, Kansas City, July 23. We've already traded $7.84. So when you talk about being balanced, what I fear is that there's too much of what I'm hearing in the country from growers is it's all in or none in. It's 0 or 100%. And I just think that's as wrong as you can be moving forward. You have to do things incrementally, smaller amounts, scattered. I'm a huge fan of the structured products that the cash grain companies are offering. And, you know, I thought Kevin always likes, Andy and I would go through this, like, what's your favorite trade? That's always the thing. What's your favorite trade? Well, July no beans are over $1 a bushel. And I know that that's a widowmaker, and I wouldn't suggest that anyone in this crowd trade that spread. But old crop beans relative to new crop beans look awfully overpriced. You know, is there a place for someone in your operation to say, maybe we should buy some slightly out of the money old crop July puts as protection for the new crop? Again, it's a one-time expense. You can put it in your paper account. You don't have to worry about a margin call. Maybe you buy a 1340 July put as an example, and then you turn around and finance it with a max-only contract in the cash markets, but basically selling a call. You know, a 1340 floor in the old crop financed with a $15 kind of call in the new crop can be done for pennies here. And I think those are the kinds of incremental transactions that you can make that make sense. But don't sell half your crop in one fell swoop. Sell 5 or 10. Don't sell everything out in the old crop without touching new. You know, Kevin and I are very similar. I think Kevin's about 80-90% in his old crop corn and beans. It's just because the yields were too good and the money was too good, and we don't want to mess it up. What kind of new crop should we have on? Well, if you've got new crop inputs purchased, you know, so you're long fertilizer now and you're long corn in the seed bag, probably ought to have about a 30-year new crop corn sold in some way, shape, or form with some flexibility built in. We're getting close to crop insurance time. I'm a huge believer in buying the premium product. You know, I think that's a great way to look at things moving forward. So that's the tone that I think we need to live in. Gregg mentioned earlier, you know, CGB, you know, we trade the basis, so we're watching spreads. That's all important to you too. But we take the farmer view from, you know, more of a 20, 30,000 foot view, multi-year, multi kinds of techniques, and it all turns out into a balanced portfolio, not all in. Kevin and I have a lot of respect for Kathy Woods. You know, she was early on Tesla. She's big on picking, does a great job of picking stocks of future disruptors. I think everyone needs to be involved on some of those long-term kind of scenarios. But she absolutely got crushed this year. You don't throw the baby out with the bathwater. You kind of mix that in. So I don't have a problem with putting 5% of your portfolio in something aggressive. What does bother me, and I'll close with this because Andy's always got something important to say, but in my neck of the woods in northwest Ohio, we had the best crop ever, and we don't have Champaign, McLean County, Illinois dirt. And a farmer about my age, I've known him a long time, and he would tell you he's very conservative. Probably a 170 corn APH, he raised 230 this year. 45 bushel bean APH, obviously not special, 72 bushel this year. Okay, lots of money. What's he do with the money? Now, of all the things we talked about, and Kevin always pushing, thinking, being broad-based, what did he do? He built a bin, he bought 2 farms. I'm not sure that's the right decision. Everyone understand, I think that's a lot of the message that people like Kevin and I are trying to promote. We don't think that's the way. Looking back at what worked isn't the way we want to go. So I'll close with those, and Mr. Daniels, it's all yours.
Hey, Mock, I like buying farm ground. What the hell? Look at Mock's got nothing to say. We'll argue that later tonight, probably. We'll get to that in the next.
Well,
next
rates are going higher. It's a question of, for me, in this particular case, is the whole farm. He's 66 years old. He's got two 32-year-old sons that aren't involved enough in the business, and all of his portfolio is in farm ground.
Yeah.
That's what I don't like. I'm all about diversification and balance. Might be wrong. You know, it's about singles and doubles, Kevin. It's not about the grand slam home run, because at his age, he's going to strike out, and then he sets the kids behind a bunch. It's too much.
Right.
It's too much risk. He's too concentrated.
All right, I got that one. Daddy, you said you're going to stir him up a little bit. What do we got today?
Well, I'm going to go take a little bit different tack and just kind of talk about price and balance sheets and things that used to matter. I don't know how much they do anymore, but anyway, to that old school thinking. You know, if you look at the bean market, we'll start there. You know, in 2021, we rallied about $2.50, and it was obviously led by oil. And you know, to Walter's point earlier, I had a good conversation with Craig Turner with StoneX, a friend and partner of mine, and he shared with me a study he did recently for a big commercial company, and basically looked at veg oil use since 2006. We've seen an average of a 4% increase per annum globally on veg oil consumption. So oil demand is inelastic, and I really do look for that trend to continue. We got to the point now where we've taxed all the other oils around the world that used to be the discount markets, but right now canola oil is making an all-time high. Hell, palm oil is now a premium to soy oil, and that doesn't happen once in a blue moon to begin with. So, you know, oil is going to continue to be the leader, I think. And, you know, the implication of what we have on the drawing board right now in terms of biofuel production is staggering. Right now we have the capacity to do about 1 billion gallons a year. And if you add up the projects that are on the drawing board and being contemplated, you could increase that fourfold over the next 3 to 5 years. Problem with that is that, you know, we're using about 11 billion pounds of veg oil or soy oil a year now for biofuels, and that's about 40% of our total production. So do the math, as Emily would say. We don't have enough oil supply, even if we used all of it, to satisfy that production capacity. So, you know, is the U.S., what implications does that have? Are we going to become similar to Argentina in that we'll stop exporting beans and, you know, crush for the oil and export the meal? And, you know, what consequences and implications does that have? And that kind of goes to what Walter and Greg were talking about earlier. But, you know, looking at what the market's been doing here and now, I mean, 2 days ago, I think StoneX came out and dropped the Brazilian crop 11 million tons. Well, I have a little problem with that, frankly. If you're starting at 148 or 150 million ton crop size, yeah, you can maybe drop it 11 million. But from the 144 level, I don't think you're currently, today's world, you're any less than 138. You got to keep in mind that a little part of Brazil is having a problem, and it's getting all the news and attention and fanfare. But the reality is, northern Brazil is a garden spot, as it always usually is. And, you know, you know, if you listen to this sound, that's the export door on the United States shutting. And right now we're anywhere from a $10 to a $15 a ton discount, our premium, to Brazil January forward on exports. And you know, that's going to shut us out. Hell, we need to lose 5 million tons out of Brazil, or we'll be shut out as an exporter from the U.S. to China on beans all the way through September. Maybe now we can get back to work in last half September or something like that and revitalize our export program. But one of the things that's kind of been left out there and not talked a whole lot about is the fact that China is about 9 million tons behind in their imports this year from us. And, you know, how are we going to make that up? So, you know, you had people in the last couple of days have been talking about, oh, well, 340 carryouts now a 250 carryout because we're going to have to raise U.S. exports. Emily, I think you and I kind of are like-minded on this one, but I'd be inclined to say that the U.S. exports are going to be closer to 500, maybe even higher. Emily, were you about 550 or so?
My ending stocks are 550 million bushels.
Yeah.
Export bookings are down 13.2 million tons, and the market's like, ooh, no.
Yeah.
Just no. That's just such a hard no. And what's even scarier, sorry, and then I'll turn it back over, but in 1920, the marketing year, U.S. ending stocks were 525 million bushels. Okay, so if we're right and we're 550, the farm gate price in 1920 was $8.57, $8.57.
857, and now we're at what, 1280 or something like that?
Yeah, I think it's 1253.
Yeah.
Close enough, but you know what I'm saying. I'm just like, I look at that and I'm like, I guess we're cursing today. So it's just, it's a holy shit. Like,
Yeah.
you got problems, but the market wants to ignore that for now.
Right. But, you know, we're headline traders these days. And so, you know, as the money goes, so goes the price and the direction. And so right now, you can't fight City Hall. My God, you know, you sell the first rally, sell the second rally, and you are the third rally. And it'll carry you out in a stretcher. They don't take prisoners. So, you know, it's a very big and treacherous market if you're trying to fade trends. But on the other hand, you know, if you start talking about a 550 million carryout, to Mike Mock's point, you know, July no bean spread at $1.05 inverse is insanity. And I would bet you that by the time we get there and we roll from, you know, Jan to March, March to May, May to July, July to August, August, September, and finally get to November, it'll be a carry. So there's a big move coming in that spread, and Mike had a good way of playing that as you know, in a fiscally responsible way. I wouldn't probably put myself in that category, but I will be playing it from the short side. You know, it's certainly not without risk, and it's not for the faint of heart. But you know, probably my favorite trade in the soy market is being short the spreads. Flat price wise, I just don't see. Here we are. Okay, let's talk. We can talk about where we've been, but now where are we going? Well, you know, look at acres. Acres last year were what, 93.3 corn, 88, 87 point whatever beans. I say you got to start there again, and that's what we have to use as your barometer. There are people that would argue we're closer to 95 million corn, and I wouldn't disagree with that. I'd be leaning that way. But others would say, you know, we're closer to 90 million. But anyway, to slice it, you know, between 88, 89, 90 million bean acres and a 51 type yield, you know, that will be more than satisfactory to maintain carryout wherever next year, wherever we end up this year. And I'd agree with Emily, it's north of 500 million. So do we need to be up here close to $14 a bushel old crop beans? I don't think so. At a minimum, I wouldn't be keeping my bins too full. You know, you look at South America, I mean, my God, between the real where it is and the futures where they are, this is the highest price they've ever seen in the history of ever. And, you know, for them they're doing everything in their power to sell everything they possibly can and move it out of country. So they're going to maintain their competitiveness against us and shut us out of the export markets, and we'll be the residual supplier like we have been in wheat, like we are becoming in corn. I mean, that's what we do. We're residual to the world now. And so I guess I'm not a big fan of the long side of beans going forward in 2022. Corn-wise, I think it's a little bit different animal. Even though we're not competitive on an export base, we are, you know, anytime a cash market is above delivery, I have a hard time fading it either from a spread perspective or a flat price. And right now, cash corn is above delivery. So I think that it has a better story. We're looking at almost $1.5 billion carryout this year. I think that number's too high. I was talking to Chris Trant with HedgePoint the other day, and we were kind of discussing where we are in that regard. I think personally exports are too high. I think exports could go up 100 million from here, maybe 150, because you know we're going to have some problems in Argentina theoretically and southern Brazil, and so we may pick up some export business. We've seen a good surge in our demand from our neighbors to the north in Canada and Mexico. So, maybe, just maybe, you could take exports up 150 million. I think that ethanol could go up quite a bit. I mean, hell, Tom and I were talking last night. You got dollar margins in grinding corn right now, and you're grinding at maximum capacity, and stocks continue to get drawn down. So, we haven't seen an increase in the last 3 WASDE reports. I think next week we get some surprises, and we might take that up 150 million from where we are now. So we could end the year at $1.2 billion type carryout, and $1.2 billion type carryout with 90 million acres ain't enough. $1.2 billion carryout with 95 million acres might be. Acres is a big question. I mean, usually you don't see huge variances between acre potential, but this year that's not the case. With input costs as high as they are, with alternative crops as profitable as they are, you're going to get a lot of variance between, estimates and where we finally end up. We're looking at bean values, wheat values, cotton values. Everything seems to really have a lot of upside potential. So, we'll be looking at a bigger range and a lot more variance this year going into planning. But if you use the 93, 95 million type corn number and trend line yield, you're fine. But any sort of problems, and corn could have some legs to it and upside potential. One thing, I kick myself, and every year I do this trade, and every year I get out too early. But last year, for instance, September-December corn spread. Okay, September is essentially new crop, right? September December corn spread last year went to a 35-cent inverse, and it did it right around the same time flat price peaked in the spring. Traditional. By the time we got to September, the spread was at a carry, 10 to 15 cent carry, depending on what day you looked at it. My favorite trade, and again, this is one that maybe like watching paint dry, but certainly is one that you have to be with till August, is buying December and selling September corn. It's currently trading around an 18-cent inverse. It can get out to 20, 25, yeah. But at that kind of a level, at the end of the day, no matter how small the crop is or how bad it gets burned up, September is rarely, if ever, any good. So I like being short that spread. And I think, again, it's one that you can feather in over time. It certainly doesn't have anywhere near the volatility of the bean spreads. So I feel more comfortable in that kind of a trade as well. And, there's certainly a lot of other things we could go over, but I think we want to leave time for questions, so I'll stop it there.
All right, gun to your head. You selling corn, beans, wheat, rice?
I'm selling beans.
Selling beans. Keep the corn, keep the rice, don't price it yet?
Until cash tells me otherwise, no.
Yeah.
And eventually, because, wheat, rice, not that anyone looks or cares, well, some of you do, I'm sure. But rice has been, is the one that hasn't really followed the leader as we've moved forward. But I think we have some reckoning coming there, and somewhere down the road, by the time we get into late spring, I'd be surprised if rice wasn't significantly higher than where it is now, just to catch up with the other commodities, if nothing else. But at some point, it's going to go up and go up a lot.
Perfect. Any questions? Jordan, Todd, anybody got anything? Let's see what we got. We covered a lot, so.
Hey, Kevin.
Yeah.
I'd like to ask Mr. Willis, my friend.
Yeah.
Corn ethanol and aviation fuel down the road. And we talk about the investment that we're seeing from, Marathon and Phillips and Chevron, but there's been talk of ADM and that's what the corn guys I talk to. What's the future of ethanol 5-10 years down the road when we have more electrical vehicles on the road?
Well, sustainable aviation fuel is going to be huge. And I think you're going to see some of the major companies, there's already talk of it, making those investments. It is popular with this administration. One thing about it kind of picks up a life of its own. So I think that is going to be a huge play that would compensate for any reduction in motor fuel with it.
Can you say that one more time? I want you to say that. I want the crowd to hear that. I think that's very important for corn farmers in this crowd. Aviation fuel is going to offset the loss with.
Yes.
Okay.
That's a 3 billion gallon market. I mean, that's pretty big. So yeah.
We don't talk enough about that. We need to continue to share that with this crowd.
No, it's a very good point. That when you consider electric vehicles and however that's going to play out, and it's a very difficult calculation on how that's going to play out, you have to bring in sustainable aviation fuel. It's not going to be a total loss for the ethanol industry. The ethanol industry is very, very dynamic right now. And there's a new world order that's coming to the ethanol industry. And what Summit Carbon, Summit Carbon Solutions and blanking the other pipeline. I don't mean to exclude the other pipeline, but I'm not remembering the name. When you talk about the young people and you talk about sustainability and you talk about a virtuous cycle, if these pipelines are successful and all the super pure CO2 that comes off the stack in an ethanol plant, I always ask my kids, what is that coming out? It's white, it's fluffy, and no, that's smoke. No, that's not. That's CO2. That's super pure CO2. That's the yeast activity that's driving that CO2. It's super pure. That gets caught in a pipeline, captured in a pipeline, and stored forever. You have a very virtuous fuel. And so the perspective on the sustainability of ethanol, as people begin to understand that all the carbon is being captured and sequestered safely, and it's super pure CO2. If there's a rupture of the pipeline, there's not going to be, the typical sort of pipeline spill perspective. That plus sustainable aviation fuel, that plus the corn fermentation protein that's being produced, an excellent quality feed protein that's now coming out of DDGS, the perspective on what is an ethanol plant, what it does, what it produces, is there's a dynamic changing, and it's changing very rapidly. And it's all positive. It's not negative.
Correct me if I'm wrong, but didn't ADM recently announce that they were taking 50% of their current ethanol production capacity and transitioning that to sustainable aviation fuel?
Yeah, they did that in conjunction with a publicly listed company called Gevo. And so that technology remains to play out. I don't know that the process is date certain on when they'll be producing sustainable aviation fuel, but they did associate themselves with Gevo.
Which I guess I just say that to make the point that it's very clear that if ADM is going that direction in such a large capacity, that speaks going back to renewable diesel, the fact that the petroleum industry has latched onto it. I think that speaks volumes.
If I would just add this, and I've just left the industry. For those of you who are shareholders in an ethanol plant or members of the board of an ethanol plant, I would do a lot of homework because there's a lot changing, and the value of what you hold is much higher than the value that it's being given to it today. It has tremendous upside.
Perfect.
Well, what you're seeing and what you guys are saying, I 100% agree with. We will be producing an ingredient or product that can be used in several deals, where in the past, when you thought of ethanol, you thought of something that you blended in motor fuel. And we're going away from that. So just to enhance what's going there. But that's good for the corn farmer.
It's very good.
That is good for the corn farmer. So,
I think we're going to have to wrap up. As usual, we've gone over. I think I had too many great friends and people up on the panel, and I brought them up here because they're all real and they're all personable. So you guys know, anybody can come up and talk to you and ask you guys questions, and that's what they're here for. I mean, Greg Beck rides motorcycles all the way across the country. I love talking with Greg. Mock plays some golf. Susan David's got a farm. She loves to shop. My wife and her talk about all kinds of things. Andy hunts fish. Willis has got his own farm and cattle going. So, a lot of common ground. You guys ought to really get to know them. I'd like to open my friends up to everyone else in the audience. So I appreciate you guys coming out, and I know everybody will hopefully spend some time talking with you and help them any way you can, and I appreciate it. So let's take 10 or 15 minutes, come back for the next one, and we'll go from there. Thank you, guys.
when the water got rough.